So, Lord Lilley, can I kick off with you? We've got 25 minutes or so. Can I kick off with you? You're a member of the Lords Environment and Climate Change Committee, a Conservative peer. Is this energy transition a mirage, or is it actually going to happen in our country, given what Rishi Sunak did last week or the week before in just slightly altering the roadmap?
Well, a mirage, of course, is a vision of a real place that looks nearer than it is when you're in the desert. And that's probably true of energy transition. It will happen, but it'll probably take longer than has been spelt out both in this country and even more so worldwide. On Rishi's step back, in a sense, by delaying the target dates for electric vehicles and heat pumps, they will have far less substantive effect than people imagine, but far more, I believe, beneficial effect in opening up a wider debate about costs and benefits. They'll have less substantive effect because the electric vehicle, because the committee's just taken evidence from the Motor Car Manufacturers Society of Motor Manufacturers and Traders, and they pointed out that the UK market is very unusual for cars. We export more than 80% of those we produce, and we import 85% of those we consume. So actually the change of British regulations only affect 1 in 5 of the cars made in this country, but 100% of the cars imported into this country. So it actually, although people made a bit of a noise, it has very little effect on that, especially as we're keeping the rules that require you to sell an increasing proportion of the vehicles you sell must be EVs. So I think it's by 2028, you'll have to have about 50% of the vehicles you sell, any company, will have to be EVs. And if, for example, you sell 60% internal combustion and 40% EVs, you'll have to pay £15,000 fine on each of those 20 excess vehicles, so which means effectively that you will have a penalty of £5,000 a car for every ICE car for every ICE car you sell.
So the government is active in the market, although on the regulation it's going to be a little bit more on the actual...
Well, they haven't changed that.
Yeah.
They changed the final date, but by 5 years, putting it in line with the EU and many other countries.
Now, your committee is going to be looking at the issue of electric vehicles. What kind of things will you want to be asking, and who will be wanting to give evidence?
Well, we've already had quite a few sessions, and we'll have more. We obviously speak to the car manufacturers. We've had a session on car charging. My own view on car charging is that as far as the public things, they were developed. We didn't have a plan to make people build garages for internal combustion engine cars. But the difference with electric cars is most people want to charge at home. And what you do for those who don't have garages and can't do it on the premises, and so you've got to either build across the pavements or do other things. That's the area where we should be focusing on. And I can't speak for the committee. We haven't reached any conclusions yet, but it's likely to be quite a heavy focus on the charging arrangements across the country.
We'll talk about other elements of the themes that we're discussing in a minute, but just one last question on motor vehicles. I read out the report from the newspaper earlier about Virtue Motors results, which is a big car dealership chain based in the northeast, but it's a national chain. And it was saying that the EV market at the moment, across nearly 200 dealerships, is 17%. But the distortion of that is that most of that 17%, by a clear majority, was corporate and fleet. My own little business, we have 5 cars, and 4 of them are EV because the staff get a fantastic tax incentive. It's cheaper for them, so they choose EV. But the general public isn't. What can be done to persuade the general public to choose EV rather than compulsion incentive?
Well, again, I can't speak for my committee, but I can guess what the majority of them will say, because they always do, that we should have bigger subsidies and more compulsion. I'm the grit in the oyster on the committee, and I'm rather in favour of limiting subsidies and compulsion. And I hope that electric cars will become attractive in themselves with longer range, cheaper prices, and the advantages they already have have been cleaner and potentially simpler to maintain. So we can move down the line of subsidy, but already electric vehicles are subsidised by not paying for the roads they use, not paying petrol tax. So by 2030, we are told 30% of the vehicles on the UK roads will be electric vehicles. So the government will be foregoing £9 billion worth of tax revenue a year to the benefit of electric vehicle owners, paid for by the rest of us. And that's an issue we've got to solve. What do we do when people are no longer paying tax on their fossil fuels to pay for their roads and everything else?
Okay, let's bring in David Cunningham from, I've got the pronunciation right, Gneiss? Good Gneiss, yes. First of all, tell us about the energy business, because you're one of the few panellists I haven't chatted to in advance. Tell us about the business that you're in, what it does.
We're a small investment bank, so we do corporate finance, project finance, so that's trading businesses, buying and selling companies, merging companies, raise capital for solar park development, wind farm, onshore, offshore, EV charging, we raise money for an EV platform business. So a mixture of different stuff, all the way from early stage VC, PE, all the way through to infrastructure.
So when it comes to, say, solar panels on an office block and funding something like that, a project like that, is that the kind of thing that will be done on the basis of just a conventional risk assessment of the business, or are you looking at some kind of ESG incentive to get people to take up the funding to generate the new solar and climate-friendly energy?
Well, financing is all driven by numbers. It always is, always has been, and it always will be. And when you look at solar in the UK as an example, solar undercuts grid-tied power. So just about anywhere you go in the UK, if you put solar on a roof, unless it's completely shaded, it will undercut grid-tied power. So on the basis of that, you can finance it. So you don't really need a subsidy. So if you look at even offshore wind, it's what we call merchant nose. So you go into the merchant market and you'll get a better price than what you'd otherwise get in a CFD. So when you look at AR5, which is the auction for offshore wind, just recently it was announced, there was no bids. But if I go to the PPA market, power purchase agreement market, I'll get a better price than I would have got at a CFD. So that's a failure of policy to recalibrate to the market. So the reason, I think the original question you asked is it a mirage? This all comes down to, is it more efficient? Is it more cost effective? Is it sustainable? And if it ticks all those boxes, you can finance it.
And what are the rates of finance that you're looking at? How would you risk and price the rate?
Well, in the last 12 months, things have taken a dramatic turn for the worst. Traditionally, we would, on an internal rate return basis, we were financing onshore, offshore wind and solar anywhere between 6 and 8 times IRR, whereas now you're looking double digit. And that's just a consequence of the discount rate. That's a consequence of the interest rates that we now pay. And it's a reflection of inflation. So there is a lot of strain in the market because of that increased cost. And therefore, when you're looking to finance a project, then you're demanding a higher IRR return. So in general, things have moved up about 400, 500 basis points from where they were previously.
And do you think that's one of the main limitations to where we are on net zero now, the finance gridlock or the increased costs?
If you talk about renewable power, that is the biggest issue because all your costs are up front and you've got to finance that. So if your discount rate is higher, cost of capital is higher, that means your levelised cost of power is higher. So that's why when you look at the sort of £43.73 or 37 for AR5 for offshore wind, there was no bids because you couldn't finance it, you couldn't build it at that price. I mean, realistically, 65, 67 pounds a megawatt hour is the kind of price you would need in order to build an offshore wind farm today.
Okay, we'll come back to you in a minute. Michelle, let's change slightly. You represent Invest North East, and at the beginning of the conference I was explaining where the North East is in terms of these different ecosystems. How do you see the developments that are significant in the North East and what it has to offer?
I think I'll do a quick intro for people who don't know what we do. We are the region's inward investment agency, so we work with any company that's looking to grow or expand into the region. And we do that through key sectors, so energy and offshore, automotive and electrification and advanced manufacturing industries, life sciences and digital, and then financial and business services. Those are our sort of key focus. So very much reflective of the region's economic strategy. It's clear to see actually that those sectors are attractive because companies are attracted to us in those sectors, not just because of they can physically get a market here, but actually because of our natural assets, but also our coherence. So I think there's a really strong story to tell around how our energy system interacts with our automotive industry and that sort of whole system approach, and the level of innovation in the region as well. So we've seen that in the northeast we can sort of make ourselves look slightly different from other regions. There's been a big push in spite of recent policy announcements around net zero technologies, and we see other regions really promoting their transition. But we're one of the few regions that can connect all of those different parts together, so that's a real differentiator for us.
The region also has lots of cluster groups, doesn't it? Automotive, by way of example, I've already heard about offshore wind, but if you look at automotive, and we're at the point, we'll talk about it properly after lunch, where you can almost go from, as Stuart said, borehole to battery, but there's the manufacture and distribution of cars, the dealerships and so on. Do you find that this clustering is beneficial to you as someone taking the message of the Northeast out?
It absolutely is, and we do often talk about this. Only 3 degrees of separation in the northeast. That's a great asset for us. Sometimes it's
not always that many, is it?
No, so sometimes it can be a bit awkward when you see the same people 4 times in a week at different events. But yeah, so the clustering's really beneficial. But we also see that companies in the northeast that are part of, for example, the automotive cluster, they're very willing to think about how they can diversify. And really great example is we've been working with Lockheed Martin, who are looking to build a satellite manufacturing facility in the UK, and they're really only looking at the northeast, and that's because they've been really impressed with how we've worked. So we looked at trying to get them to engage with the supply chain, how they could do that. So even if they didn't locate here, they're interested in how they can purchase. As a company, Lockheed spends about $3 billion in the UK alone. So that's a huge amount of money being spent in the UK. If we can draw some of that, so much the better. So we worked with them around developing supply chain, introducing to some of these cluster organisations, and they've signed an MOU with Supply Chain Northeast, which is run by RTC, to develop. So they have a direct partnership now for 2 years. So we see that those clusters that have been developed really have that beneficial effect. And so whether it's in offshore, the offshore network, or in automotive, those companies are interested in how they can diversify, what are the new markets, and where are the innovations happening.
And then one other question, within the UK itself, I know you see the West Midlands as a natural friendly competition, but the West Midlands has a unitary mayor for a larger area combined authority. We've got one in Teesside, there's one in north of Tyne, there's going to be proper full devolution for the rest of the northeast soon. Is that something that is holding us back, or are you able to overcome those issues?
We do certainly overcome them, but I'm not going to lie, it is a challenge. It's and mostly just because companies aren't particularly interested in our sort of fairly irrelevant kind of administrative boundaries, but we have a series of incentives and support packages that are available in some parts of the region that are not available in other parts of the region, and then we do try and hide the wiring a little bit to cover that. But we're one of 5 organisations that will become part of the new mayoral combined authority next May, and I'm hoping that will really streamline things, but more importantly, as well as the fairly functional things that we do around grants and support packages, actually having really strong regional leadership will help us kind of fly the flag a bit more coherently.
Yes. Let's bring in David. 2 Davids on the panel, so I have to make it clear. David Sandbrook from Carter Jonas. Now, we were talking about minerals earlier, and a lot of this has been about minerals. And we've seen this idea of from the borehole to the battery. When it comes to the ownership of land and minerals, can you give us a sort of layman's guide for those who are not involved in that sector to how one would secure the rights, the extraction rights and the licensing rights to minerals? Do you own your ground to the Earth's core as you do in some countries?
Well, firstly, as a chartered mineral surveyor, it is really an honour to be in a building such as this, with its roots in mining past, talking about mining future. And we can't hide the legacy of mining because it's influenced our property. The general principle in the UK is that if you own the surface, you own to the centre of the world and to the heavens above. But like all things, there are exceptions. In England, Wales in particular, the Crown owns certain minerals, gold, silver. Coal is now under the control of the Coal Authority. But minerals can be severed from the surface. And when we talk about minerals, we're talking about a legal definition rather than the mining or the geologist's document. And so we're in a position whereby you may own the surface, but other parties could own the minerals below. And sometimes that's clear. You could have a registered title of the surface and a registered title of the minerals. Sometimes it's not so clear, and sometimes it's not known. Sometimes it is almost impossible to find out who actually owns the minerals. You know that you don't, you know the parties don't, but you don't know who does. So it's a known unknown. So these are the things that we've got to try to deal with, because uncertainty is the enemy of investment. So certainty into who owns issues, particularly when there is a recognition by government. It has a critical mineral strategy. So if critical minerals are critical and important and of national importance, we need to find ways of quickly unlocking that uncertainty and finding out who owns the minerals. When you do know the parties that own it, it is possible to come up with commercial arrangements, albeit there's no standard format, as there is in some parts of the world. You're down to discussing with parties and parties, surface owners and mineral owners, access. And it's all very well if the geology is clear. If you're working a limestone quarry and there's a field next door where you know is full of limestone, it's quite simple. But here we're dealing with large areas where there's lots of exploration needed in the first stage before you know where the minerals are.
And when minerals are contained within liquid and liquid flows, you can stop one mineral getting from one place. So the idea of a rancher in the Wild West blocking a river, where minerals flow underground as well.
The ownership of a mineral in solution is a matter that's taxing a number of lawyers. There is a proposition that is not owned, but you've got to get to it. I think it's important to look at property in 3 dimensions. So similarly, as you would in getting from A to B through different surface ownerships, the same could be same with strata. So it presents some challenges, even if the mineral is in solution and not owned, it's getting to it and the boreholes. So it presents some challenges, and we really need to be setting the dial, both in terms of ownership and access to minerals, and particularly planning. So we move away from let's not do it to let's do it and do it well.
Peter, I don't want to put you on the spot too much, but there are lots of issues to do with energy, from fracking to extraction of lithium through brine, where the rights of access to minerals actually falls inevitably on the government and what the view of politicians and decision makers are.
Yes, and our rules, well, I think your previous speaker was David was much better informed than me. I used to know about all these laws, and in America I thought it was very different, that if oil and gas flowed underground, then they used the law of capture. It was the same as wild animals running onto your property. You had the right to kill them and eat them. And so they'd always drain the neighbouring property as fast as they could to get it out before the neighbouring property drilled their own wells. But I thought we were different, and it was the oil and gas in place, and presumably that of other minerals, that is owned by the landowner above and can't be captured by a neighbour. But that clearly needs to be made legally clear if there are minerals and things which haven't been adjudicated on.
And there's this principle of win and work, isn't there? Could you just amplify that a bit?
Well, there's two elements to there's the ownership of minerals, and often the term uses minerals are accepted from transfer, so they're owned by somebody else. So that's the mineral, if you like, as a property. Win and work is a right, and so some surface ownerships, somebody else owns the minerals, and they have the rights to win and work them. It's possible to own the minerals and not have rights to win and work them. So they do need to be linked together, and sometimes they're not. So it's getting, the ideal is to have clarity on what's owned and what's not owned. And then, you know, there are ways, for example, it's been talked about the compulsory registration of minerals, which is now required in Scotland when there's been a transfer, but not in England and Wales, so that there's more clarity about who owns what. And if there's a lack of clarity, coming up with a plan so that people can exploit the minerals, explore, without it just being a complete blocker on development.
We were talking with the finance hat on about energy and financing things like offshore wind and so on. But the extraction of minerals and the financing of that is obviously a consistently big issue. Scientists that are in this room will be talking to us about, geologists about where things are, but getting at them and financing them, hugely difficult.
Yeah, I mean, it's just a very different market. I mean, if you look at wind and solar and you look at power generation, it's utility scale returns. It's relatively low risk. You've got an elastic demand for power. There is a bit of seasonal variation, but you pretty much know what's going to happen year on year. Whereas when you look at mining, it's commodities, and commodities, you know, by their nature go up and down with supply and demand. And as a consequence of that, it's much more difficult to finance it. But in saying that, one of the benefits that you have in the UK from direct lithium extraction is that you've got essentially 3 potential revenue streams, which pulls that into an infrastructure-like project. So you've got heat, you've got power, and you've got lithium brine that you can extract. So I think that's one of the great plays that we have in the UK, that we can develop that market, which is essentially geothermal. So it's either geothermal heat, which is a huge area for decarbonisation in the form of district heating. And aligned with that, if you can extract the lithium on top of that, then it's additional revenues for that project. So that in itself should be a great funding mechanism that pulls in different sources and different pools of capital to develop those projects, so you're not isolated in the volatility you get with commodities.
Okay. Now, Peter, I just wondered, my last question to you is about the balance of energy and resources that the government is allowing to happen in this this march towards 2050. We've just had the Rosebank offshore oil field granted permission to be exploited. There's companies like Equinor involved in that. Do you think that this pragmatic approach and this balanced approach is going to be the correct path towards the future, or does the government need to spur and stimulate a little bit more?
Well, there are 2 ways you can reach net zero. One is phasing out the demand for fossil fuels by bringing forward supply of renewables and so on. The other is to phase out the supply of fossil fuels. We have adopted, every other country has adopted, the phasing out of demand. If you also phase out supply and you do it yourself and nobody else does, then you have to import fossil fuels during the period when you're still using some, which is silly. If the whole, and results in more emissions. If the world tries to phase out supply, and it phases out supply faster than it phases out demand, then you'll have shortages, high prices, huge profits for the oil industry, and you'll have done to yourself what Putin did to us 2 years ago. So I just don't understand the people who say, let us stop the production of fossil fuels. Let's continue phasing out demand. If people are foolish enough to invest too much in fossil fuels, they'll be left with stranded assets. Couldn't happen to a nicer country. I used to be one of them. But that's their problem. It's not the government's problem to protect the oil industry from investing too much. But it's not the government's problem either or world governments to stop them producing stuff, so that we don't, so that we end up in a sort of Ukraine-Putin situation with shortages and high prices and huge profits to the oil industry, because we've got ahead of the phasing out of demand. So let's just stick to one thing, phase out demand between now and 2050 or whenever, and let the oil industry produce as much as it can.
Okay. Michelle, you've worked in the inward investment for the North East for a long time, and I know you want to attract new businesses in, but the other side of the coin is to get our existing business infrastructure to transition and invest. And that has gone relatively well as well, hasn't it? Because you've got companies that used to work in mining, in steel, in manufacturing, and in oil, pipe manufacturers, valve manufacturers, changing what they do.
Yeah, and I think you can also see the trends from what inward investors are telling you as what's actually happening with industry as well. So there's a really strong appetite for clean energy, and it's really hard to actually, to sleeve your energy and to say, this is it's all, we've got that access to Dogger Bank, which people come and talk to us about, and they're very interested in that. But if they plug into the grid, they plug into the grid, and but there's increasing investment in microgrids. So IAMP is a great example of sites that are really responding to that demand. But you can see that companies that are already here that have made investments are starting to reinvest in some of these technologies, and companies that are looking at their own power supply, various different systems as well. I have to confess that I don't really do business support and work with existing companies. It's really sort of following the trends.
You're dragging them in.
Inward investors, yeah.
Well, you're doing a good job. Right, we're going to round up this session now. I'll just see if there's any more questions from the audience, because we've got another speaker and we're running a little behind. Anyone else want to ask a question that could go to the general panel today? No. Right, okay. Well, thank you very much. Could you